I think as a business, the way I view ourselves is we're an IP company. We own a portfolio of intellectual property, which are assets, which are known as top-level domains. And those are when you look at an email address or web address, it's everything to the right of the dot. Those are universes. We own a portfolio of those, 32. And we make our money by individuals and businesses buying their names and paying an annual fee. And that is our business model. And at the heart of our business is we're an annuity business. Our goal 3 years ago was to set up a business to deliver a highly predictable annuity revenue stream, and that's absolutely what we are today. I think the main piece was, I mentioned earlier, the importance of registration growth. Without getting the registrations in through the front door, you're not going to get your renewal growth. Our registrations up 37% in the year to 1.81, and since then we've grown to 1.87. So that growth line of registrations absolutely moving on very well. The next key number, which I've mentioned, is obviously the renewal piece, because that's the part that we can model, and that was up doubling to $9.4 million, 62% of our revenue. So a very important piece. And the third and most important metric of our business was the cash we collect. We're a very cash-generative, cash-based business, and we collected in the year $16.1 million. The final bit of restructuring we also carried out in the year was about cleaning up our balance sheet. There were a number of onerous contracts, one in particular of a hugely onerous nature, that we needed to address. And we got ahead of that. We signaled at our interims that we'd be making provisions so that going forward in 2019 and onwards, we'd have a very clean set of numbers. Renewal revenue, because that's at the heart of transforming ourselves into an annuity-based business of scale. In 2017, we achieved our first milestone, and that was for renewal revenue to surpass our fixed overheads, our OPEX. 2018, we got through the next milestone, which was for our renewals to get through not just OPEX, but also cost of sale. We have significant visibility on our renewals for 2019, and we know that by the end of the year, we'll be very, very close for our renewal revenue, that predictable revenue, to be greater than our OPEX, cost of sale, and most importantly, partner payments, which are typically about 18% of our overall revenue. Once we're through that, we become a significantly cash-generative business with literally every dollar that comes in through the front door, 80 cents of that drops through cash through to operating EBITDA. The three pieces are, first of all, organic growth. That actually has to be at the heart of it. And in 2018, our core portfolio, we saw, again, a year of real growth in our renewal revenues, up 20% on our core MMX portfolio. We then had an acquisition along the way, which helped really accelerate that piece. So a real important part clearly is just organic growth. We've been on an amazing journey in those 3 years. When we took the business over, we had 300,000 registrations across our 32 properties. Today, we're just shy of 2 million. We are a major player in our sector, and registration growth and maintaining that registration growth is key to growing the renewal revenue. So that is absolutely the heart of the business. We then will do selective acquisition, and that means where properties fit into our renewal model base and complement our growth in renewals and accelerate that growth, yes, we will consider acquisition. And obviously the ICM acquisition last year was a classic example of that. And then the third leg of our growth is innovation. The World Wide Web is based on the notion that names route traffic over the internet. But actually underlying what the DNS is really doing, it's creating an association between a word and an IP address. And that was really at the heart of the World Wide Web explosion. And that happened over 30 years ago. And frankly, there's been very little innovation in the DNS system. Outside in the world, the broader internet, we have the IoT and we have blockchains, and this is where computers are still talking to each other, or in this case of IoT, or in blockchain, where people's identifiers are these very complex long strings of 32, 42 characters, and depending which blockchain. So we wanted to research and test the very simple notion that a single word that is a naming convention that works on the World Wide Web can also work on a blockchain. And we used Ethereum as our test partner blockchain, and we were delighted in November to launch the very first top-level domain whereby the same naming convention, if I put my name into the World Wide Web, it will resolve to a website. Equally, if I use it on an Ethereum blockchain, it will resolve to my wallet. Rather than giving out these long strings. So that was the notion. We got a really, really strong support in Asia region for this notion. And in the last 3 months, the first quarter of this year, we've been able to announce that we're now integrating Bitcoin into the naming approach, and also EOS. So the 3 most important cryptocurrencies, public blockchains, are now, there will be an approach through .luxe where the same naming standard can work in 3 different blockchains. That's never happened today, and we're very excited by that opportunity. Traditionally, when for a country code or .com, when a name is first originated and sold, there is a purchase price, and then it renews at the same price. And as everyone knows the .com story, a lot of speculators got in, secured names, and then sold them at vast gains, which is kudos to those folk. As new registries, we saw the opportunity to actually capture some of that value. And so we introduced, obviously, the standard pricing for the majority of the names, but then there was inventory that we recognized would have value, and so we introduced tiered pricing, which was called premium sales. And as I mentioned, this business was when we took it over, the operating business was working at an $8 million loss, and we saw a real opportunity to use the one-off premium revenue in the first instance to rapidly right the ship and get us into operating profit very quickly. And when we did that, we did it in a very deliberate, calculated manner, that instead of letting all the premium inventory go and flood the market with it, we deliberately throttled it back so that over a 5-year period, we could rely on premium inventory to allow the operating business to be profitable, but give us the runway to grow the renewal revenue and standards. Today, we predicted originally when we modeled this and first met the investor community, we predicted at the end of year 3 that roughly 50% of our revenues would be based on renewal and standards. The reality is today, 62% of our revenue is renewal based, 15% is standard sales. So put that together, 77% of our sales are hugely predictable. And then we have this icing on the cake, which is premium sales. And what's great today is that half of our premium sales are automated through the channel. And then we have brokered sales, so that's where very high sales. So the model we set out 3 years ago, we've delivered on ahead of schedule, and we see that model just continuing to build.